What if one decision in Japan could shake the entire global financial system? For years, Japan kept interest rates below zero. Cheap money flowed across the world, fueling investments, boosting stocks, and stabilizing markets. But now, everything is changing. Japan is raising interest rates, and this could trigger a massive global financial shift. The Bank of Japan has officially moved away from negative interest rates, a policy it held for decades. This decision may sound technical, but its impact is huge. Why? Because Japan was the backbone of what traders call the carry trade, borrowing cheap Japanese yen and investing in higher return assets worldwide. This system injected trillions of dollars into global markets. Now, that system is breaking. When interest rates rise in Japan, borrowing yen becomes more expensive. At the same time, the Japanese yen starts to strengthen. This forces investors to unwind their positions fast. They sell foreign assets, stocks, bonds, emerging market investments, and they bring money back to Japan. This creates a liquidity shock across the global financial system. Here's where the real danger begins. Global bond markets, especially government bonds, are already under pressure from high inflation and rising rates. If Japanese investors start pulling trillions out of foreign bonds, yields could spike sharply, prices could fall rapidly, and governments, already heavily indebted, could face a funding crisis. This is how a localized policy change turns into a global risk. The global financial system is deeply interconnected. Banks, hedge funds, and institutions rely on stable liquidity, but if liquidity disappears suddenly, we could see stock market volatility, currency instability, and pressure on emerging markets, and even financial system stress. This isn't just about Japan. It's about the foundation of modern global finance. So what should you watch first? The Japanese yen. If it continues to strengthen, pressure increases globally. Second, bond yields, especially in the US and Europe. Third, global liquidity indicators. For traders, this means volatility and opportunity. For investors, it means risk management is more important than ever. Japan's interest rate shift may be just the beginning of a larger global reset. The question is not if markets will react, but how far the impact will spread. Stay informed, stay prepared, and don't forget to subscribe for more global market insights.